So I think I'll open up the panel to talk about, given the current situation in the Middle East, the Gulf War, like I mentioned, the weathermen, most of you know the weather better than us sitting up here. You're on the ground, you see it every day. I live in Florida. Sometimes you can't even look out your own window to know what's happening a mile away, so you have to call up somebody and say, is it raining over there? Can we play golf today? So you probably know as much about what's happening today as any of us. But one of the things I would maybe start off with Alan, and when you start to give us a little of your background before you answer the question. So what do you think could happen, and when will we know?
I wouldn't be here right now if I knew that, Ron. I would be on the beach in Florida enjoying it. First and foremost, I work for Regions Bank, and we manage approximately $75 billion in assets for the clients of the bank. So my team thinks about it from an economic perspective, from an investment perspective. So it's a particularly germane question, Ron, about what do we think about what's going on. And the adage that always sits with us as we think about what's going on today and the future is the wonderful adage from Mark Twain, which was, history doesn't repeat itself, but it rhymes. So when you think about what happened in the 70s, what happened in the 80s, there's always a precursor to these things. So nothing is really new in human society and how people react, and from an economic perspective, what that may mean. And so the reality over time is that we're always dealing with these challenges. We're always dealing with volatility, uncertainty, complexity, ambiguity. And so from an economic perspective, we think that, yes, it will be challenging over the next few months as we work through this. Our hope is that there will be some level of peace or agreement as it relates to what's going on in the Middle East. And from an economic perspective, the one positive in what we hear at the tip of the spear with business owners is that companies were in pretty good shape prior to this occurring. It wasn't perfect. There were certainly challenges from an inflation perspective and from a hiring perspective, but bottom line is we came into this on pretty solid footing. So our hope, if we can resolve this in an expedient manner, that the economy will not have that Wile E. Coyote type of moment going over the cliff, that will continue forward, but it will be a bit of a slowdown over the next couple of months and really through the end of the year. So our hope is that we'll get to that close to end of 26, early 27, and start to see some of these benefits of the earlier strength in starting the year.
And Corey, describe what it means to be an operating partner at Bain Capital, and what this means to your portfolio companies.
Yeah, hi everyone, Corey Harris, operating partner at Bain Capital. What that means is within our portfolio, and specifically the private equity fund, I work with our companies to drive value and to deliver on the underwriting thesis that we invested based on. So I'm working with a lot of companies who are navigating a lot of the challenges or headwinds going on right now. And one of the things that we've focused on is to think about the horizon of impact. So you mentioned working at least through the end of this year into early 27 with these headwinds. I would argue that you really should be planning for more like a year or two. You would expect that some of the sort of shock to dissipate in the next several months, assuming the war is resolved. But getting back to the stability of the economy and sort of, building from, I would say, the trough back is probably more like a year and a half, maybe even two. So as you're thinking about the planning that goes into how you're running your businesses, I would think about it through that horizon. The other thing that I would say just in terms of background is I have run a small business. That business failed. I've worked for startups. And so I'm trying to navigate some of those uncertainties as well in my personal life.
So I'm going to switch a little to go back in a little bit more history. So in 1965, the Immigration and Nationality Act was passed, which reversed a long period of immigration policy which favored Northern Europe. And it opened the doors for more migration from places like Africa, Latin America, and Asia. And over the period of the 70s, we had some of the biggest numbers in immigration, mainly from those countries that added diversity and fueled a lot of our industries. Last year, we had the first year of net migration, where more people went somewhere else to live outside the U.S. than moved here to live. So as a city planner and as someone who has studied workforce, can you tell us what the current environment around the immigration means to the economy and to small businesses?
Absolutely, I would love to. Again, Brenda McKenzie. I'm with the City of Tampa.
City of Tampa.
Yeah. Hello. We'll use this one. Hello. Okay, that's great.
Did I say?
Hi, change makers. How's everyone? Okay, great. So I'm with the City of Tampa. I've worked with cities throughout the country and different mayors. And in terms of immigration, from an economic development and workforce perspective, I don't have to tell you, it's paramount. When you as business leaders, entrepreneurs, think about your inputs to your business, people, you typically need people. You typically need staff in order to carry out your mission. In terms of our workforce, we have historically been able to rely on a growing workforce. Immigration was a big part of that. The other big part of that is birth rate. In terms of the current economic situation, our birth rate in the U.S. is declining, and our immigration rates are declining as well. It's exacerbated by the fact that you need to attract talent from different places. If we're not having babies and growing that way, we need to import or encourage other people to come internationally to work here. Well, that's gone down. So if we look at our universities have been a worldwide draw, attracting talent who builds our workforce. That's gone down about 22%. Of foreign individuals who are coming here to study. From about 100,000 people fewer are here now from 2017. So we have declining inputs, which puts more pressure on the workforce pool. And you're probably feeling that as you're looking for talent at this very moment.
So that also reminds me of a story. I actually, when Nakasone was the Prime Minister of Japan, and Japan was on the top of its economic, and we all had to learn how to speak Japanese because they were going to rule the world. And Nakasone made a comment saying that America could never compete because they had too many blacks and Hispanics. That caused a pretty big stir here. There was a gentleman from California, Congressman Merv Dimerly, who chaired the Asia Pacific congressional thing, and he threatened to cut off this and that. So he was invited to bring a group of African American business people, communications. I went representing black banks, et cetera, to spend a week in Japan, meeting them and learning what they were doing. What happened in Japan, because they didn't have migration, because their population was older, didn't have a birth rate, they're now coming out of 20 years of stagnant growth. They've lost their place in terms of economic power, and they're just now reviving. So that's another lesson that we have to look at, because some of the actions we take today and some of the things that you as business people, and you're not just business people, you're spokespersons for your community. You're spokespersons for your customers. So yes, we can try to predict, we can go with the flow, but we need to create our own win. And you need to be active in your community in speaking out about how important these things are, because there's a lot of messaging coming out with all kinds of thoughts, I would say, about what is happening and has happening, but you're on the ground and you know what's happening. So that's the other thing I will mention is coming up in the 70s is that I was fortunate to start my career on the heels of the Great Society program and affirmative action. and that was a great win behind me. Opened up a lot of doors for myself and my peers, and many of the doors that many of you are still moving in. There was a reaction to that also, reverse discrimination, a lot of legal things. That changed into not affirmative action and quotas, but more a movement around diversity, DEI, and now that's under fire. So Brenda, maybe what some of those things mean and what's the prescription for the next steps?
I mean, good point. I mean, I wasn't here in the 70s, ha ha ha, but
No,
yeah,
you were.
good point. Obviously, the more diverse your work pool is, the better you're able to understand your customers or work with different folks. There's things happening at the Supreme Court, there's things happening in local legislatures. I'm in Florida. We really have to look at different ways to talk about how do you encourage inclusive growth? How do you encourage inclusive teams? Sometimes you can't say everything out loud. Sometimes you have to quietly, diligently work at making sure that you've got a diverse team, that you are reflective. I mean, I mentioned immigration before. That's a part of it because you're right. In previous years, the U.S. didn't really encourage immigration from all types of countries. So that was a relatively recent happening from 1965 beyond. So unfortunately, or fortunately, this is why you're the change makers. You're the ones who are going to be able to make it happen. You're the ones who are going to be able to hire in an inclusive way to make sure that your team is reflective of the needs that you have. It really relies on you because at the moment, it's not a focus of our government.
So, Alan, as a chief investment officer, you must be looking for where the opportunities are despite the current environment or because of the current environment. So can you speak to how your bank is looking at where there are some opportunities for growth and where you see some potential for small business development?
Certainly. So as we think about it, one, great comments Brenda had regarding the silvering of the globe, and it's something that we think about quite a bit because if you go back in 1975, approximately 5% of the global population was over the age of 65. Fast forward to today, that's just over 12%. 50 years from now, it's going to be approximately 25%. So when you think about the workforce, it is evolving, and it's evolving globally, not just in the United States. So, and Ron had a great comment about Japan. They've already gone through this. So we're trying to use some of the lessons from that of having a lower birth rate coupled with less immigration and what that may mean for the workforce. Certainly the opportunity lies across the US in the Southeast. It's particularly positive as we think about where growth is happening today. When we look at where businesses are forming today across the Southeast, they're also forming in other parts of the country, but when you look at it from an economic perspective, that certainly is occurring, and certainly industries associated with technology, healthcare, and even now on the industrials and defense front are getting a lot of the capital in terms of growth around the country. Doesn't mean that other industries are not receiving that capital, but those are areas that we think are going to be particularly, or have particular benefits going forward. And then the final point I would make would be one that in keeping with the theme of the weather, there's a wonderful Swedish comment that there's no such thing as bad weather, only bad clothes. And I think about that for small businesses, which is how do you prepare yourself? There'll always be something. And as we think about investment opportunities, the tip of the spear trying to find ways to have the right clothes, to have the right strategy, and be willing to change those almost on a moment's notice. And I always think of learning more from attendees events like this than what I'm hearing at the macro level when you see what's the inflation data, what's the unemployment data. That's all well and good, but it's so far in the rearview mirror. Small businesses are the ones that every morning are waking up and trying to manage through that. So we see those opportunities, but it's not without some challenges as it relates to the headwinds from a macroeconomic perspective.
Yeah, and two things I would add, just in terms of talent. One is that I think retention is more important now than ever before. So if you have key talent within your teams, within your companies, thinking about ways, whether it's through development, building the right culture, maintaining the right culture, et cetera, I think retention is going to be super key in this net outflow of talent from the country. And then the second thing that I would say is that when you think about where you deliver value to your customers, and you think about the workforce who can help you unlock that, it may be reimagining what that looks like. You'll see folks working until they're much older. So how do you continue to upskill and develop talent in older adults who are continuing to work longer and longer and who could drive a lot of value in small businesses? So I would say, don't forget that the talent pools may be much broader than you might think, and then also that retaining the existing talent that you have that's driving value is super important.
So one of the things that we're all here, we all care about our employees, we care about our community, we care about building a better future for the next generation, but the other thing we care about is money. Because we want to make it so that we can survive. So Corey, you work for Bain Capital. It's a big supplier of capital and one of the leaders in terms of private equity and venture. What are you seeing in terms of, given the current environment, access to capital and where's the money going?
It's part of the unfortunate thing, I would say. Capital right now exists, and it exists at a level probably as high as the last 5 years, okay? The challenge is that it's incredibly concentrated where the capital is going, particularly when you look at private equity and even as you go sort of earlier stage to VC companies. A lot of it is going into tech, a lot of it is going into AI. And so I think one of the challenges of the capital is that while it's accessible and while it exists, it's being diverted and concentrated in such a select few industries. So that's sort of broadly the challenge with capital. What I would say is that, and sort of the advice that we've been giving companies as well is, in the absence of capital or access to capital, everything becomes self-funded. So more than ever, how you think about cash flow and cash management is so important. I don't know, when I work with companies, I'm always, one of the first questions is, show me your 13-week cash flow. What does it look like? If your revenue was to decline by 10, 15%, what trade-offs would you make tomorrow? If your costs increase by 10, 15%, what trade-offs would you make tomorrow? What would you pass through? What would you absorb? How transparent would you be about surcharges? And so I think, in constrained capital environments, being as self-funded as you can be is super helpful. And if your business can fund itself, then you're independent and able to sort of, fuel growth in the ways that you want.
I'll just add one point to, I think it's almost a misperception because so much money has been raised in private capital more broadly, from private equity out to venture capital. But as it's gotten larger, in some respects, they're unable to then invest as much on the smaller deals and opportunities because it just doesn't make as much of an impact. So the larger the funds get, it's easier, if you will, to do bigger deals that are going to be more impactful, which unfortunately leaves some...
Squeezes out small businesses.
Squeezes out some of the small businesses, which is an unfortunate and perverse almost incentive of how it's played out.
Yeah, I think one of the challenges in the small business market is the transaction costs as opposed to the creditworthiness or the ability to get repaid, et cetera. And actually, over the long haul, if you're an investor, you probably would like to have $1 billion of $1 million alone because there's more diversification, less risk, et cetera. But on the other hand, the cost of accumulating it does that. And I will give a little ad now. That's why one of the things that are under pressure, and banks would know this, is the CDFI community, who have been a source of capital for smaller deals, and things like housing and affordable, and they're under a lot of pressure. And I have a lot of familiarity with that community, and they have their little niches, and it's hard to get them changed. I do think that there's an opportunity for the business people in the room to maybe approach the CDFIs and talk to them about how they could reorient their business to serve your needs. And there is still support both from the banking industry because of CRA and from foundations that will supply some of that, because I think the combination of those small, locally based lenders and fintech, and we haven't gotten to AI, but the ability to maybe manage some of that can really dramatically bring down the transaction costs. And that's maybe we'll wind up. AI, you're gonna hear AI probably every other session after this, but we haven't touched on it too much. But what are some of your thoughts about AI, how it impacts capital, how it impacts, particularly Brenda, how is it going to impact employment and
Okay, so before I do the AI, I just kind of wanted to dovetail a little bit on the last one in
yes.
terms of an opportunity. There is good news with the market and what's going on globally and nationally on a macro scale. If you hear all the talk about layoffs, and I'm not going to name the companies, you know who they are, very large companies, great institutional knowledge, and they're laying off 10,000 people at a time, 14,000 people at a time. This is an unprecedented opportunity for small and mid-sized businesses to get extraordinary talent who are looking for a change, who are looking for something a little bit more entrepreneurial, a little bit less corporate, let's say. So do take advantage. A lot of times when you're hiring, you're looking at maybe your lower to mid-level staff. This really is a sweet spot to pick up some prime talent at a senior level, a mid to senior level. So really do think about your hiring needs at this particular time, because it really is unprecedented. In terms of AI, at the moment, it's great. Everyone should learn it. I think what it does reinforce is that we should be in a situation where we're constantly learning. There really isn't a terminal degree. Whether you're a doctor or a lawyer, you do continuing education. I think we all should adapt that as well. So we should be learning. We should be learning how to use AI. And we should also keep in mind that AI is still catching up. It's moving at a rapid clip, but it's catching up. So if we look at some of the greatest needs, which are in like the hospitality industry or healthcare, which hires at a rapid clip, those are some of the areas where AI is lagging just a little bit. So there's still time, it's still growing. Make sure you listen to Dobbin today, but make sure that you're taking advantage of it as well, because it really is going to serve your business in the long run.
I would just echo that. I think today it is augment rather than replace. It's allowing workers to be more productive and more efficient, but it's still in its infancy. And to your point, it can't just be a set it and forget it type of scenario where you'd say, oh, I can just use AI and just turn it on and it's magically going to improve my business. But it's how do I, at the margin, improve a bit more with each iteration of it? And how do I start to integrate it into my business where maybe it allows me even in a low hire, low fire type of economy, to not have to replace that next worker. Maybe I can add a bit more productivity out of another worker. And so I think it's going to just take some time for us to get to a better place. We're all still learning though right now. So I think we're still in its infancy, despite the significant amount of capital that's been already spent on it.
Yeah, I mean, I maybe I'm a little bit more lean forward on AI. But I think of AI right now as probably the greatest equalizer that we've seen in society probably in the last 20 plus years. And by that, I mean, you have access with a $20 subscription a month to some phenomenal AI models. And so I think this is the window where small businesses can get ahead of large companies because large companies have a lot of bureaucracy. When it comes to technology and tech adoption, they can be incredibly slow. With a small business, you can make changes tomorrow. So I would argue that you really should already be using AI for marketing, for customer service, for back office operations like scheduling, logistics. Tomorrow, I would argue that you should be using AI for inventory planning, routing of trucks if you are a business that relies on logistics. So I actually think now is the moment to lean forward. Right now, the economics are in your favor in the sense that it is still so cheap, and I think it's going to get more expensive, but it is still so cheap to gain access to these tools. And so in that respect, I think of it as an equalizer. In that respect, I think it's very lean forward, and I think small businesses can be much more nimble than large companies and outflank them right now. So I would say lean in.
Yeah, again, I'm the OG. I'm old school, and when I was growing up, I had old school parents, and they would send me to my room for punishment. But they put the Encyclopedia Britannica in this room, and then take away all my toys or whatever else I was doing. So I would sit there sifting through these volumes of looking up this, looking up who, but usually I was looking up some sports figure or something that I was interested. But now I have an iPhone or Android and just say like, who was the best such and such? Or what should I say on the economic outlook panel? And what are businesses doing? So it's a great tool. So I'm looking at my watch. They have this clock here that doesn't seem to be working, but I think it's near 9 o'clock. Any last thoughts? So we'll go through, starting with Corey, and last points of wisdom or experience you'd like to share?
Yeah, I'll say 3 things.
Okay.
The first is know your unit economics. Know your inputs, know your outputs, understand how fluctuations in those inputs and outputs affect your unit economics. The second is cash flow and cash management. Be in a stronger position to fund your own growth. I think that could be particularly differentiating for a small business. And the third is lean into AI. Do it now.
Yeah, I would just using the 3. I would say 1 is cash is king, to Corey's great point, and that regardless of what's going on from a macro perspective, at the end of the day, it's the cash that you're generating. 2, expect from an economic perspective that inflation will be higher for longer. It's not going away anytime in the near future, and what's happening today is only exacerbating that. So think about your input costs and what that may mean. And then the final one is thinking about growth in the future in terms of how do you build a business that can, to my comments earlier, have the right close and be flexible, which I think AI is part of. But I think it's just the daily mantra of that in terms of how do you engage every day and prepare not just yourself, but also your workers, employees, on how they can think in a forward way and be resilient in the face of a host of complexities.
I would say, look at the current environment and how can you be opportunistic to, move your business faster? What helps you the most? In terms of employment, as I said, really look at this opportunity to pick up senior talent that's been laid off or outsourced, but have much more to contribute. Be flexible. When you're looking at talent who are younger, Zoomers, they like flexibility. They don't always want to come into the office. Sometimes it's good to be flexible if you're trying to build that early talent. And then use AI as a supplement. How can it help you do something better faster, whether it's procurement, administrative services, marketing? I was talking to Wayne out from Baltimore who was saying he was using a CRM that does his marketing for him. So how can you use AI in a way that's going to help you be more nimble and move your business forward?
Oh, I don't. So thank you very much. So I'll end. I just retired, but I had a long career as a banker, ran 2 small banks, And I never forget someone that said, oh, you're a banker. You're a guy who wants to sell me an umbrella when the sun's shining and then take it away when it's raining. So I would just end, the one word is liquidity. The cost of liquidity never exceeds the cost of illiquidity. So I think for the small businesses, just guard your cash, stay liquid, because it will be the source of taking advantage of opportunities, but it also may be the source of surviving until it stops raining. So thank you all very much. Good luck.